Hi there, Don McGee here from Royal LePage Atlantic. It's that time of year again, tax season. Most Canadians are going to be expecting a large income tax return and going right ahead and booking that trip south. I'm here to tell you that maybe you should reconsider booking that trip south and consider using it as a down payment instead. Interest rates are so low right now, and there's lots of government incentives to get you into your first home. The biggest hurdle for first-time home buyers is getting together that deposit they need for their down payment, which is a great reason to use that tax return as a deposit, not for going south this year. Along with using your income tax return, I'm here to tell you some other tips on where to get your down payment from. Lenders will not accept money from another loan or from a credit card to use as a down payment. The reason is they want to see that you have the financial responsibility on saving the funds to get that deposit together. And also by adding another loan to your debt ratio, it may affect your credit rating as well. So they want to see that you've saved up that money and done your due diligence and work to getting that goal. Lenders also want to see that that down payment has been in a bank account for at least 90 days. The Nova Scotia government has offered a down payment assistance program, which will allow pre-qualified buyers to borrow up to 5% of the purchase price as a down payment on a home. Now, this is an interest-free repayable loan, and it's capped out at properties priced up to $150,000 in Nova Scotia. Now, in the HRM, that price point goes up to $280,000 just because of the market being different in around the Halifax area. But this has allowed lots of first-time home buyers to get into their first home over the past year. Another way to get a down payment together is by using your RRSPs. The government has a home buyers plan which will allow you to withdraw up to $35,000 as long as you use it towards the home purchase down payment. Now, you don't have to pay it back right away. You get up to 15 years to pay it back. But if you miss a scheduled repayment time, then it will be charged to you as income. So that's something to keep in mind when using RRSPs through the home buyers plan. Now, if you're buying with a partner, they too can also withdraw up to $35,000 to use as a down payment. So that helps out a lot. But opposed to that, there is the tax-free savings account, which you could save and withdraw and use the funds without any tax implications. Now, if you don't have a thought process or a plan in place to repay the RSP program, then the tax-free savings account may be the way to go. Now, you can receive down payment in the form of a gift. But there are very specific criteria for it to be considered a gift. You have to prove that you don't have to pay it back. You have to prove your relationship with the gifter. A parent can give to their child up to $30,000 as a gift for a down payment, and a regular family member can give up to $15,000. Anything over above those amounts, you will be taxed as income. But yeah, and you also have to prove and declare your relationship with the gifting party. After you purchase and take possession of your property, there are a few government programs as well that will give you some tax incentives. You can claim up to $5,000 on your income tax the following year that you take possession. You get about $750 back depending on how much you claim. There's also the GST/HST rebate for GST that you might have paid on a new home purchase or renovations made to a property. You can claim the GST on your income tax. Lastly, there's Energy Nova Scotia, and there's lots of rebates and programs in place for helping your property get to be that much more energy efficient. So those are some tax incentives as well. And rebates available to you on your new home. So anyways, any other questions, give me a call. I'm happy to talk real estate. I'm Don McGee from Royal LePage Atlantic.